Hello and welcome to the Financial Wellness Hour. I am your host, Hirsch, Serman, and I'm happy to have you here on WGSN-DB, the Going Solo Network. This show is for those wanting to learn more about creating financial wellness, and we're going to take different life cycles and we're going to explore them both financially and emotionally, because personal finances are more about your emotions associated with your money than the finances themselves. Although we may be general in our discussions, we'd love to hear from you, make it more relevant and make it more personal for you. So please call in, or you can reach me through my website, lifecycle.financial. That's lifecycle.financial. You're also welcome to post your comments and your questions on Facebook or YouTube or anywhere else that you might be listening. More than ever, it is so vital to understand debt. Whether it's existing debt that you're carrying already, whether it's debt that you're about to take on and incur, it is so important to really understand the consequences and the payback of this debt. It is significantly easier to get into debt than to get out of debt. And we hear these horrifying statistics of people carrying credit card debt and other debt. And in about a month, we're going to see a whole new round of people taking on student loans, which, by the way, is actually the second largest category of debt in the country after mortgages. And we hear so much about credit cards, so you can imagine what people are carrying in student debt. We see millions of dollars just being taken every year in student loans, and they don't understand what they're doing. And not understanding your debt, how to manage it, how to reduce it, how to eliminate it, can be financially crippling. And that is one of the many reasons I am thrilled to have Barbara Yong join us today. Barbara is an attorney with Golan Christie Taglia and focuses on debt reduction, elimination, and bankruptcy. Barbara, thank you for joining us. I appreciate you being here.
So it's my pleasure. Just a little bit about me. I've been a practicing attorney for almost 40 years. Most of my time has been spent either doing bankruptcy, litigation, debt reduction, and asset protection planning. I work a lot with both consumers and business owners, and I love to help people get out of debt and get on the path to creating wealth, creating savings for the future, maybe helping their kids get through school, and having a better life. There's so much less stress when you have a little bit of savings in your pocket and aren't living paycheck to paycheck.
And I would say, to add to that, I think people don't even understand what you can do. And I'm going to ask you a little bit more about that as we go through the show. But I think understanding that just because you're carrying debt doesn't mean that you have to carry debt forever, as you said, is so important, and how it frees you up. And anyone who struggled under the burden of carrying debt knows that it's draining emotionally and financially. There's several ways that you can get out from under that burden. We were talking before the show that I had helped a family with $191,000 in credit card bills. And now, admittedly, they had a very solid income. They had one of the spouses was going back into the workforce, earning almost $90,000, which is an enormous infusion of being able to take that money and focus it on debt. Not everybody has that ability. For some, working on a game plan only goes so far and might not be enough. And so they're going to need a professional like Barbara to reduce that debt and utilize her expertise to be able to help them in that way. So sometimes it's a combination. It might be working with Barbara and myself. But the bottom line of the whole show really is that you want to get out from under the burden of debt. And so, Barbara, I got to ask you, we hear on the radio and on TV these ads stating how just this kind of magic call to an 800 number can eliminate your debt, or at least that's what they allude to. And it almost sounds like this panacea of all ills, right? What debts can actually be reduced through negotiations?
Yeah, so I would definitely start with credit card debt. You can generally speaking reduce credit card debt by as much as 20 or 30% if you have the resources to either pay them off in cash. Maybe you borrow from friends and relatives, or against 401ks. I would never ask anybody to take money out of an exempt asset like a 401k, but you can borrow against it. Medical bills, taxes, you can do an offer and compromise, with the federal government. And then there's a lot of guarantee debt that small business owners have, like bank loans, leases, other finance arrangements. All of that is negotiable, and so much better to get that reduced as much as you can.
And I would say not to go it alone. It sounds great to be able to just say, oh, I could potentially save money, right? That's great. But the expertise of someone like Barbara can get you that much more in a reduction. Sometimes I think people feel, oh, if I ask for that kind of a reduction, I'm asking for too much. But you do that every day, and so you know what's reasonable and what they'd accept. So they could be leaving a lot of money on the table, I think, if I'm hearing you correctly as well.
Yeah,
right?
And I would say it's important to work with a professional. Those services are often more expensive than you'd expect. So not only do they charge fees, but sometimes they charge you a percentage of the debt that they're able to save for you. And that's not really a good deal.
No, and as I said in the beginning, we don't understand our debt. If we don't understand the services we're contracting for, we're probably going to end up in debt again in some fashion. So definitely understanding that as well. And then just confirming, because we didn't bring this in, and you do deal a lot with bankruptcy, but when it comes to bankruptcy, you could potentially eliminate 100%. Is that right? I mean, talk a little bit on what you could reduce there, if you don't mind.
Yeah. So there's two kinds of bankruptcy that are available for individuals. Basically, a Chapter 7, which looks at your assets, and if you either don't have a lot of assets or your assets are exempt, you could file Chapter 7 and discharge 100% of your debt immediately. A Chapter 13 is more like debt consolidation or a payment plan. And once you complete your plan, again, anything you haven't paid will be discharged. So at least, again, 80-90% of that debt can be discharged.
And I'm going to ask you to just elaborate on a term you used. I'm not sure everyone understands. And when you say an exempt asset, can you elaborate a little there?
Yeah, so the law, and this is both federal and the state of Illinois, and most states throughout the country, allow individuals to protect assets from creditors. There's a homestead exemption of a certain amount in your home. There's an exemption in your car. There's an exemption for your wedding ring, for example. 401ks, IRAs are all exempt from creditors. So the last thing you want to do is invade any of those assets. You want to either file a bankruptcy or negotiate with your creditors and keep those exempt assets intact, because you could either, one, avoid a litigation, a lawsuit, and still keep those assets, or go through a bankruptcy and you come out the other end with those assets intact. So it's important that you talk to somebody before you start taking assets and using them to pay your debt.
I encourage that last piece as well, amongst everything, that you want to be educated before you move forward. You want to speak to somebody. When you going through this, it's you kind of focusing on the moment, and this helps you. And what Barbara was talking about helps you not just focus on getting through today and what we've got, but also helps you secure that future that you don't get back there, I think, as well, which is also very important. So are all of these debt categories equal? And what I mean by that is, are certain debt categories easier to negotiate? For example, let's say your credit card versus a medical bill versus your mortgage to try to reduce them.
Yeah, I think all of that, there is the ability to negotiate. I think credit cards are probably the easiest. I would give you one piece of advice, and that is, while credit cards are easy money, it's a little bit of a trap that people are unaware of. And I remember watching an Oprah episode where Terry Savage, the money lady, the author, was talking about if you go to Kohl's or Target and you buy something on sale, 30% off, 40% off, but you use a credit card to buy it, you've in essence paid about 300% of what the value is of what you purchased, and you may never ever pay off that balance. So you're not really helping yourself if you reach for that credit card as opposed to using cash checks and debit cards first. So be really careful.
Absolutely. You know, I caution a lot where the credit card companies study us. I mean, our buying habits and everything like that. And those offers that you get, come with us and, you know, you'll get 100,000 points. Well, you've got to spend a lot of money to get those 100,000 points. And it's usually like miles or something like that on an airline. Where are you going to put the vacation, right? The spend, you're going to put it on the credit card. So that 100,000 miles for them comes back many-fold over back in interest and merchant fees and all the rest for them. And again, they study us all the time, and we study their offer for a minute or two, and you know we hooked kind of thing. So
right. The other reason I think it's easiest to negotiate credit card debt, excuse me, is because so much of it is interest. There's principal and there's interest. Whereas with medical bills, there doesn't tend to be interest. Sometimes they'll charge a late fee or a penalty, but it's more principal. And so they're a little bit more reluctant to reduce the debt. And then with your mortgage, there is, especially due to COVID or other times of depression and recession, where mortgage companies really don't want to default you and foreclose and take properties away. They just want to get paid, but they're willing to modify those arrangements. So it might be reducing interest rates, it might be lowering the principal, it might be stretching out the payments for a longer duration, so your payments are lowered. So there's a lot of opportunity there to get yourself some relief.
That's great. And you want to obviously know what your goal is going in, as we've said. You know, when I work on eliminating debt with people, I prioritize it very differently to you. I mean, it happens to fall under similar categories, but I look at the highest interest rate and the biggest impact on you financially. That's what we want to eliminate. So as you said, medical bills might be 0, credit cards might be 20%, and they've been closer to 30% a few years ago. You know, but understanding that approach, I think, becomes very important as well. So now we've worked some magic. You've eliminated some of this debt, let's say 20 to 30%. When this debt is forgiven, does it become taxable income to the person who's carrying that debt?
So the answer is yes. It's taxable in that it's income. However, if you are insolvent, and the definition basically means you have more debt than assets. If you're insolvent, you don't have to pay those taxes. So it might be taxable, but it's not payable. So if you have either gotten debt forgiveness through your mortgage company or from credit card companies, don't be afraid, even though they'll tell you, we're going to issue you a 1099-C that you have to file, but you may not have to pay tax on it. So it's really important you talk to either an attorney or your tax professional. And
I've seen that personally with people, you know, where they've got these 1099-Cs. They look at them, they don't understand what they are, and they just process them because they don't know enough. So getting educated in all of these pieces, you know, as I said, it's so much easier to get into debt than get out of debt and understand the complications of getting out of debt. So you may want to plan when you reduce your, if I'm hearing you correctly a little bit anyway, you may want to plan when you actually reduce your debt based on other things happening financially. So, for example, maybe I work for a company that did very, very well, and I know I'm going to get a great bonus next year. I may want to push it into this year, right? Or maybe it's the other way around. If you're in a year like 2021 and you've got some money in the stock market and, you know, it's done very well, you may be getting quite a few capital gains, which is going to trigger. So you do want to plan the timing of this a little bit as well, if I'm hearing you.
It's absolutely key that you get a complete picture of your financial situation before you make any decisions, either to reduce debt or file a bankruptcy. Absolutely.
Yeah, I tell people a lot when, I mean, I'll give you an example, and I think I've mentioned it on the show before. My very first client ever emailed me and said, I want to know when is the best time to sell the home? And my response was, but in my head anyway, I didn't respond this way. In the email was, I don't know. I need to understand the bigger picture that is there for you. In fact, in this instance, because they only had about 2.5 years left till the mortgage was paid off, it ended up being much better for this individual to keep the home and was going to live literally in a single family home for about $1,300 a month in Chicago. You're not going to find, a one-bedroom apartment downtown for $1,300, let alone a whole house just outside of Chicago in the suburbs. So,
and in fact, you need to look at what's happening in the rest of the world. So not only you and your situation, but the whole world. So right now, real estate is going gangbusters, and people are selling for way over value. And so they're rushing to sell their homes, but you're absolutely right. They can't afford to buy a replacement home, or they can't afford to get into a condo or an apartment. So it's really important that they stop, take a breath, and really look at the big picture.
Right. And this is where I'll throw in my plug a little bit. Working on reducing your debt, as you said, you may have the option where you're doing a consolidation as opposed to a full elimination of this debt. Understanding your cash flow becomes so important. I can tell you, when I was in corporate America, not out on my own, I can tell you every job that I had, how much I earned that year. I cannot tell you, or even come close to tell you, how much I spent that year. We forget about that side of the equation, I think, sometimes. And this is my plug for people to have a budget. The statistics I see are about 70% of people do not have a budget. And that, to me, is shooting blind, because we bring in income, and we have to save for retirement, and we have children, and we've got a home, and all the things we're talking about. We really need to understand, what are we spending, where are we spending, and to take it even a level down, what is discretionary spend versus our essential spend? Because in times of hardship, that becomes a very important thing to understand as well, so that when we negotiate, we understand, can we even still afford the essential things that we're having based on what we're speaking about? So I think all of these wrap up into what you were saying about looking at that larger picture. Very, very important.
I help both consumers and business owners. With consumers, it is doing sort of a monthly budget and seeing where you can save and where you anticipate spending. So for example, going into the school year, you're going to have school supplies. Going into the holidays, you're going to have gift giving. So anticipating that. And with business owners, we use a tool called a 13-week cash flow, where you look at your business and you project out 3 months of income and expenses and really figure out whether you're making money or losing money. And a lot of business owners are optimists, and they think, if I get one more order, I'll be fine. And they haven't done the analysis as to whether they're making money or losing money on their orders. So
right.
Budgeting is huge.
I'm happy that you brought up that 3-month period. I would say, for the personal side as well, you want to understand that as well. We are 3 months away basically from the holiday season, right? You don't want to be thinking in November, okay, I'm going to spend $1,000 in gifts for the holidays. We want to be thinking about that ahead of time and putting money towards that, so that we have a budget for it. Because all we're going to do otherwise is we're going to put it on credit cards, and we're going to start the cycle all over again at the beginning of the year when we get that credit card bill. So I'm glad that you brought up that time frame. The other thing I tell a lot of my clients, which I think is so important, is to ask themselves this simple but very powerful question: is future me going to be upset with current me when I get the credit card bill? So thinking ahead, thinking, oh, I'd love to have whatever it is, but when you get the bill and the novelty is worn off, are we really going to be so thrilled that we bought that? Bob, we're going to be going into a break. We're going to pay some bills, but I'm going to ask, can you share, how can people get in touch with you to explore more what they might need from your services?
Yeah, so even during COVID here, I've been going into the office at least 2 or 3 days a week. My direct dial is 312-696-2034. I'm very proud to have Walter Payton's number at the end of my direct dial, 2034. And my email is BLYong, YONG, at GCT, the initials gct.law. There's no .com. And I have a website as well, gct.law.
Great. Thank you. We're going to be right back, and we're going to continue on our mission of living debt-free, and we'll be back in 2 minutes. Hello and welcome back to WGSN-DB, the Going Solo Network. Today we have Barbara Yong speaking about our mission today being debt-free living. And I'm just going to recap a few things that we've covered because we've covered quite a lot of things right now already. We're only 20 minutes into the show. So we spoke a little bit about the categories of debt that can be reduced. And I think sometimes people aren't aware of that, and they just kind of live with it or muddle their way through things, but not understanding what actually can be negotiated is important. How much you can save is pretty significant, up to, a quarter or even almost a third of the debt can be saved, which is enormous. Are all debts equal? No, some are more easily negotiable than others, and that's something to keep in mind as well. We spoke a little bit about debt forgiveness, the income, the ability to potentially not have to pay taxes on that. We spoke a little bit about the impact of everything on, we're going to talk a little bit more about credit, but that's definitely another piece that people need to understand as well, is how does the credit scores play in? What is a credit score? All of that, which we'll get to. But I do want to quickly tell a story. I was dealing with somebody, this is going back to probably about April or May of this year. Somebody had racked up some debt. Part of it was medical, part of it was just credit cards, and part of it was they went through a divorce and owed on the divorce. And when I looked at, because they were not earning an enormous amount of money, when I looked at it, it was going to be about 4.5 to 5 years to pay off the debt that she had. By negotiating debt on the credit card and negotiating debt on the attorney, we actually were able to bring that, let's say, 4.5 years down to under 2 years to get it paid off, probably closer to about 18 months. 18 months, you can see, 4.5, 5 years, not so easy to see out that far, right? So definitely very, very important. I do want to come back to a little bit of what you said about when we reduce somebody's income, somebody's debt, there is some income, but also people hear about their credit score. Not everybody knows what it is. What is the impact of debt reduction or bankruptcy on your credit rating?
Okay, so you do take a slight dip, but very short order, maybe a year and a half, you can build back your credit score. I had the opportunity of speaking directly with representatives of the different credit reporting agencies, TransUnion, Experian, and asked very direct questions about how do you impact your credit score. And the biggest impact positively is being able to pay regular payments on time. Regular payments on time. So whether it's your mortgage, whether it's a credit card, they track all of that. Yes, writing some off is bad. Having things in arrears and being behind is worse. So being able to clear out bad debt and begin resuming regular payments and current is the best thing that you can do for your credit score.
So it's interesting you say that, and it's so important people understand. There are a lot of things that, as an example, Experian is going to look at when they give a credit score. And really, I don't even think people always understand what that credit score is. It really says, are you credit worthy if I want to lend you money as an institution lending people money? So are you trustworthy in paying it back is really a large piece of, to simplify it, what it's telling us. And they do look at a lot of things. How long have you had your longest account? How often are you opening and closing accounts? All these things play in. But as you said, the number one item is the consistency of paying back your revolving debt. The other one, which I think reducing your debt in this fashion can help ultimately, as you said, is your reliance on debt is a very big piece of that as well. And so if all of a sudden I've reduced my debt by 30%, a year or 18 months later, as you say, I'm showing less reliance on getting through the month on my credit. And that I think becomes an important one as well. So
and I think people are misinformed about the effect of bankruptcy. The reason we talk about 7-8 years is because if you get a discharge, either in a Chapter 7 or a Chapter 13, you cannot get another discharge for 8 years. That's the long-term effect, is waiting to get another discharge. But again, your effect on your credit score is only short-lived, maybe a year and a half at most, because then you can build back up that credit score. And so it's really not as difficult to get past it as people think.
I'm so glad you brought that up, because that 7-year number sticks in everybody's mind. Everybody knows about that 7-year number, and they're thinking this is going to be there. Now, not to say that people, if they run a credit check, won't see that you've had a bankruptcy, right? But it doesn't mean that you can't start repairing your credit quickly and much quicker than that 7-year period, obviously, as well.
And in fact, people who file a bankruptcy, because they get rid of debt, they can get more opportunities to get credit cards and loans than even someone like me who hasn't filed a bankruptcy, because I could file bankruptcy. And so it's helpful to potential lenders to know that, one, you were responsible, you took care of the debt, and two, you can't file again for several years. So I'm more inclined to give you a new loan.
That's a very interesting point that people should kind of digest a little. But I would say also this is where some of the planning comes in, right? If I'm just picking something, I have a lease on a car that's coming due in 6 months. I don't want to necessarily file bankruptcy now because I might not be able to get a lease 6 months from now. But if I wait 6 months, get a new lease, and I'm not necessarily advocating leasing a car, I'm just using that as an example. But now I've got a 3-year run on a new lease to rebuild my credit before I have to get another one, right? So the
whether you lease the car or buy the car is another really important decision. Absolutely. Because if you have a whole lot of equity in your car, you risk that when you go into a bankruptcy.
Right. So the planning, and as you said earlier, and it's kind of been, I think, a theme through the show, really understanding the full financial picture, not just today, what's happening in 6 months, maybe what's happening in this case in 18 months, and how do we plan appropriately to have the smallest impact from a future, the next 18 months, but have the biggest impact in relieving your debt for you. That combination, being able to understand your full financial picture and understand who are you financially, becomes so important in all of this, I think, as well.
And I would add that one of the things I've done my whole career is offer people at least 1 hour, maybe an hour and a half, of free consultation. So if you call me and you just want to know, is a bankruptcy in my future? How do I deal with this debt? What should I do in terms of savings? I am happy to sit down with people and offer as much advice as I can in the first hour. If they hire me after that to do something, great. If not, that's okay too. It's my way of giving back.
And I think anyone who's thinking about it should take that up. So I can't even stress enough. And for a few reasons. One is there's just an enormous amount of information on the web. It can be a little daunting, quite honestly, to try to wade through it. But a lot of it may not really apply to you in your situation. And that's where someone like Barbara becomes so much more beneficial than reading an article online, because they're catering to the masses, if I can call it that, when you write a blog. Barbara's going to look at you and understand your situation. And that becomes the key, I think, in a more successful debt elimination or bankruptcy and going through something like this as well, because it is a very personal situation that you're going through.
Yeah, and I want to emphasize something you talked about, which is divorce. Divorce is a very costly proposition.
You're reading my mind. That was my next question, but keep going.
Yeah, so it's very costly. And most people, even if they have significant savings or significant income, end up dividing debt as well as assets through the divorce. And working with your spouse and their attorney and your attorney to deal with that debt before you get divorced is sometimes so beneficial to everyone.
So, and I want to stress, you're going through a divorce. I'm just setting up a hypothetical here. Your divorce attorney may not be the right attorney for the debt side of the equation. It's always good to eliminate debt. Don't get me wrong. I mean, whether you're getting divorced, whether you're single, whether you're married, whatever it is, it's always good to eliminate debt. But even more so, I think it's important if you're going through a divorce and understanding it and having the right professional go through that all with you becomes important. I tell people my expertise is in the financial side of understanding who you are, budgets, financial affidavits, all of that. I don't necessarily understand how to do forensic work on a business or valuation of a business, even though there's probably an accountant doing that. That's not my area of expertise of business valuation. Having the right attorney do the right project or the right work for you becomes important as well. Anything else you want to share related to divorce, debt?
Yeah, so I would add, number one, neither I nor my firm do divorce. We don't practice family practice, but I work closely in conjunction with divorce attorneys to deal with debt. So feel free to recommend to your divorce attorney that they speak with me. Again, I can talk to them for an hour for free, but work with them closely. The second thing that's really key is that credit card companies and other creditors are not bound by whatever you put in your divorce decree. So even though you may say, husband pays these bills, wife pays those credit cards, the credit card company is not bound by that. And if you don't pay, or they don't like the way you're not paying quick enough, they can go ahead and sue the other spouse either before or after the divorce to pay a lot of those debts. And so it's really important, again, that you deal with the debts before the divorce is over, assuming that you may still be on the hook, even though you didn't agree to accept responsibility.
I'm so glad you brought that point up, because I'm not sure that's always understood. When we negotiate in a divorce, we often will say, the husband or the wife will pick up this debt. But we don't have the authority to just discharge responsibility on the other spouse, because when they incurred the debt, were on the account, they were owner of the account, and so they are part of the account and part of the liability. Just the fact that you guys decide it's going to be paid one way or the other doesn't exempt anyone from that debt. Now, there are certain areas of debt, like a mortgage, where you would have to have a refinance, and there's even technical things you need to understand about refinancing a debt if you're getting maintenance and things like that. But again, unless that person's name is completely removed from the account and completely removed from all liability, they are carrying a liability, and they got to hope that it's just going to be paid by the other spouse, and they're not going to be called back and asked to be involved in that. So
right. And one of the things people don't know is that there's an Illinois statute called the Family Medical Expense Act that can make both spouses responsible for things like medical bills, credit cards that were used for groceries and clothes. And even though you're not on the card, you didn't take out the account, you never used it, you never charged anything, if those bills were run up because they were used for your family's benefit, you're both responsible. People need to know that.
That's very, very important. And just like if you're going through a divorce, the rights and responsibilities that you have and to take control of your outcome, understanding all of these things becomes just as important, and it's part of the equation. So I have sent a couple of people your way. They've always loved your knowledge, your bedside manner, if I can use the medical term of it, and the structure that you bring. I'm going to ask, can you share a little bit more about kind of what you do, how you help people, some of the steps maybe that they can take, whether it's with you, before you, to get themselves debt free? And that's not one question. I know that's about 6, but I'm going to ask that you just talk a little bit more about your services, because they are so important.
Yeah, so we do spend the first, I would say, third of our time doing the investigation. We ask people to fill out a questionnaire. We talk about their assets. We talk about their debts. We talk about their income. And we put all that in the equation and figure out what's their best future and whether bankruptcy does or doesn't make sense for them to get rid of some of that debt. Maybe it's just budgeting. But it's really important that we investigate as much as we can. Then we do budgeting, forecasting going forward, and deciding how do they create savings as opposed to continually catching up and living paycheck to paycheck. And then the third thing we do is either debt negotiation, where we talk to your medical bills, your credit cards, and we can help you reduce that debt, or file a bankruptcy and discharge the debt. And the same thing for businesses. And again, on the tax side, there's something called offers and compromise, where you may have tax debt that's more than 3 years old, which is dischargeable. Again, there's misinformation out there that you can never discharge taxes, and that's not true. You can discharge older taxes, but if you have current taxes that are weighing you down, and every year you're supposed to get a refund, but the IRS takes your refund because you owe taxes, it's really important that you look to see whether you can eliminate some of that tax debt.
And I love, part of what I love about this is I work from a prioritize, organize, simplify methodology. There's a structure to it. There's a process. There's a structure that can be used for you and your specific situation, and it moves you forward, and you really understand the steps that are going to be taken. I think often when we are so emotionally stressed and burdened with debt, we're not thinking in a logical, structured manner. And so having this kind of a process, having this guide, if you can call it that, with the expertise to do it, becomes so much more important as well. I think we have time for one more question, so I'm going to ask, do you see patterns with clients? Like, how do they get into debt? Are there patterns like that? Are there actions that are red flags that you say, oh, if people do these kind of things, we know we're going to see them, in bankruptcy or amassing debt later on? Anything like that you can quickly highlight and caution people on?
Well, I would say the first thing I see is, unfortunately, life happens. And
Yes.
it may be a sudden illness. It may be the death of a spouse. It may be you lost your job. It may be your child goes to school, as you talked about, student loan debt. But it's a sudden change in your life that was not anticipated. And even though you lived your whole life debt-free, now you're struggling with how do I deal with these situations? And then at the back end, how do I get out from under all this debt? And so it's really important in a time of need, when you are struggling with something, that you reach out and you get the help, and you don't feel like you're all alone and you're the only one. And don't be embarrassed. Don't be ashamed to ask for help. Because again, friends and family, they're there to support you and help you. I know you would support them and help them as well. So just that would be, to me, the most important thing, is not to feel like you're all alone and you have to deal with this financial struggle. Get the professional help and the personal help that you need to deal with what you're dealing with.
I love that. I tell people a lot, you want to have your professional team to help you, but you want your emotional team as well to get you through, and a combination of the two. Bob, before we wrap up, I'm going to ask, can you share one more time how people can get in touch with you and talk more about it, and hopefully take advantage of that free consultation?
Yeah, so again, I'd love to see people in my office, either in person or over Zoom. I'm happy to talk to you over the phone. So my direct dial is 312-696-2034. Again, I have Walter Payton's number, 2034, one of my all-time heroes. And my email is BLYong, Y-O-N-G, no U, Y-O-N-G @gct.law. And the website is also gct.law.
Wonderful. I encourage anyone struggling with debt or thinking about bankruptcy or anything like that to give Barb a call. Start to get educated. That's a big step forward. Barb, thank you so much for being here, sharing these insights. Debt is just, it can be overwhelming, and people need the help, and it's not something to be embarrassed about. Everybody goes through a period in their life where they need help. Who doesn't, right? And so getting somebody who has been doing it for 40 years, who loves this, has a passion around it, is just such a big advocate for you as well. I am Hirsch Serman. I am your host of the Financial Wellness Hour here on WGSN-DB, the Going Solo Network. I would love for you to reach out to me on lifecycle.financial. That's my website, lifecycle.financial. You can ask me any questions or questions for Barbara Yong that you've heard from today as our guest, and to be able to reach that mission of living debt-free. I look forward to you joining us in a couple of weeks from now on my next show. And thank you, CC Schatz, for all the magic you work behind the scenes. Thank you, everybody, and have a great rest of your week.